Hi guys, and welcome to today's YouTube video. Today's YouTube video is a little different compared to the previous YouTube videos that I've been making over the past 1.5 years. Usually we discuss Bitcoin and one altcoin or Bitcoin and Ethereum. But in today's video, we are going to do a complete market overview. I'm going to discuss and explain my plans not only for Bitcoin and Ethereum, but also for Euro against the dollar, GBP against the dollar, and also gold against the dollar. We are going to map out our plans and trade ideas for all of these pairs, because these are the 5 pairs that personally I will be focusing on trading over the upcoming weeks and months until volatility returns back to altcoins. There's massive amounts of profits to be made within the Forex market. Currently, there's more money to be made with Forex compared to crypto leverage trading. So that is one of the reasons why I also want to shift my focus a little bit to Forex and also to gold to help you guys make the most amount of money possible. Now, we are going to start off with Bitcoin, followed by Ethereum, and afterwards we are going to discuss Euro, the pound, and also gold. So make sure to tune in, make sure to get your notebook ready, and make sure to write down these plans for the upcoming week. Starting off with Bitcoin, we can see, guys, Bitcoin is still range bound. We can see that we have a very clean range high with our 2 pivots over here. We know to have a clean range, you need to have 3 pivots. We have our 2 top pivots over here. We have our bottom pivot over here. We have seen a beautiful and very clean deviation beneath the range low. This was kind of a deviation above the range high. And currently, we are testing that range high once again. Now, at some point, I am pretty sure that we are going to fill this liquidity pool that we have over here with this hour 4 bearish fair value gap, and also this hour 4 candle that has no wick to the upside or whatsoever. At some point, we are going to fill this imbalance, this liquidity pool over there. Now, until we break out above the range high, we should expect a move back to the mid-range. Personally, expecting a move to this liquidity pool over here, we all know that it's not worth longing right now. So we know that we only want to jump into potential long positions once we get a pullback towards this area or a pullback lower. Now, another reason why I'm a little bit more bullish and expecting some upside, hopefully after a pullback first, is because of this huge wick that we have over here. And now we know that these wicks are a draw on liquidity. I've explained it multiple times. I'm not going to explain it once again. If you have any questions about this wick filling strategy, make sure to let me know in the comments down below, and I will make sure to explain it step by step. But these wicks are a big draw on liquidity as well. So we have 2 huge liquidity pools to the upside that we can potentially anticipate getting filled over the upcoming week. Now, in my opinion, there are 2 areas of interest that I'm potentially interested in potential longs. My preferred area remains the exact same. It's this bullish hour 4 fair value gap that we have over here. We have seen this deviation beneath the range low, and that deviation led to this aggressive expansion upwards. That aggressive expansion upwards left behind this bullish fair value gap on the 4-hourly time frame. Green candle followed by a very important green expansion candle. Why is this expansion candle so important? Because if we look at the previous price session that occurred during this move downwards, we can see that within that price section, we had this bearish hour 4 fair value gap over here, right? So we can see this bearish hour 4 fair value gap, right? Now, usually these bearish fair value gaps should get mitigated before some more downside. Now, in this instance, we did mitigate it, but we expanded right above it, and we closed this hour 4 candle straight away above the bearish hour 4 fair value gap. So we have this inverse bearish hour 4 fair value gap now acting as extra confluence to our bullish one. So this bearish one is aligning exactly with our bullish one, and this is a bullish signal as well. Now, if we are going to go from our swing low to our swing high, and we are going to go and switch on our OTE, we can see that our OTE is approximately aligning with our area of interest as well. So my preferred scenario remains the exact same. I would still like to get a dip all the way towards this area of interest before we start building a swing long position over here with our target over here and this wick over here. Very clean invalidation beneath this low, because if we lose the range low and if we lose this low over here, we're probably going to visit lower levels. But at the end of the day, after a deviation of the range low, as long as you hold the range low, you should expect to move above the range high. Now, if we don't get to move above the range high over here, I do believe that that pullbacks are for longing, okay? Now, if we're going to get a pullback towards this area of interest over here, I think extreme amounts of people are going to get extremely bearish. But they do not understand that we are going to retest a very important area of support within a very important bullish POI because of these fair value gaps, because of this expansion upwards, and because of this structural break upwards as well. So my main POI remains the same. Now, we have to understand that most of the people are looking at this POI. That doesn't necessarily mean that we cannot retest it, but that does mean that if market makers see that we might potentially front run that POI. And in that case, there's another POI that I'm potentially interested in taking potential longs. For the POI, we're going to move to the 2-hourly time frame. And we can see that on the 2-hourly time frame, we can still see this extremely clear range. We can see how the mid-range is getting respected beautifully all the time on the Bitcoin price. And we can also see that around that mid-range is where we have a very important and strong demand area. Because we saw this move to the downside. This is where the demand was coming into the market before this expansion upwards towards the range high. Now, going on the 1-hourly time frame, we can mark out this POI over here. We can mark out our demand area, and we can see that this demand area is exactly lining up with our mid-range. And we know as long as the mid-range holds, we should also expect an expansion upwards for a potential deviation above the range high. Now, personally, I'm willing to set limits around our main POI over here. Right? I'm willing to set limits to build a swing long with our invalidation over here. If we get a move towards the mid-range, I've only set my alerts. I haven't set any orders because my main POI remains the same exactly beneath it. If we are going to see a bullish reaction off of this POI, hopefully with a little bit of a bullish sweep like this, followed by a structural break like this, we have our entry trigger for a potential long position. You can either market enter over here with your stop loss over here and your target over here, or you can wait for that extra confirmation by waiting for a small pullback into the discount area, maybe even retest the mid-range, enter on the pullback, increase your RR, same stop loss, same target, more potential profits to be made. 2 potential long positions that I'm personally willing to trade on the Bitcoin price. Keep an eye on this. If you guys do have any questions after this, let me know in the comments down below. Personally, not looking for shorts unless we get some nice confirmation around this range high over here. I will target the mid-range and I will target our main long POI. Prefer to look for longs. Ethereum. Very interesting and very, very clean chart as well. And I will explain to you guys why. Because Ethereum is also trading in a very clean range. And I do not think that this is a range that a lot of people can see, that a lot of people can identify. Why? Because like I said, we need 3 pivots. Now, this is our first pivot, and this is already a pivot that not a lot of people can see. But if we are going to go on a 15-minute time frame, we can see that this is where the price was finding support for the first time. And this is where price found resistance again before we saw a massive drop-off. So this is a valid first pivot. Now going back to the 2-hourly time frame, we have identified our first pivot. This cannot be our second pivot because we do not touch our first pivot. So that makes it very hard for a lot of people to identify the third pivot. Obviously we have our second pivot over here, and if we zoom in on this local price action over here, we can see that we have our third pivot beautifully over here, because this is where we see a beautiful wick exactly at the same level. we bounce upwards, and then afterwards we start a deviation beneath the range low, followed by an expansion upwards in which we test the mid-range over here. Classic range trade. Now, this is where a lot of people couldn't identify the range and they still can't identify the range. And those are exactly the kind of ranges that we want to trade. Now, my long POI remains the same. I'm waiting for a dip beneath our sell side liquidity over here. I'm not setting limits yet. Why? Because we haven't made a nice inducement yet. If we are going to make an inducement, for example, today, maybe we bounce upwards. This would be ideal to set some limits, right? Now we have our inducement over here. I would simply set my limits beneath that inducement. I would start building a swing long position over here with our invalidation over here. And our first target is this short POI that I will explain in a little bit. Now, until we make this inducement, I will simply wait for a price to pull into our POI to give me some low time frame confirmations once again with a bullish sweep, with a bullish break of structure, target the mid-range, target a short POI, and eventually target this liquidity pool over here. Why target a liquidity pool? Because we have seen a deviation beneath the range low, and after a deviation beneath the range low, as long as you haven't seen a sweep or a deviation above the range high, which we haven't seen yet, as you can see with these equal highs over here, the target is always the range high, and you should anticipate a potential sweep or deviation above that range high. And that is also what we are going to do with Ethereum. Now, this is a big area of resistance that I will explain in a little bit. But our main target, as long as we hold the range low, should be this liquidity pool above the range high. And that could be a potential area to look for shorts as well, but that's still quite far away. Now, patiently going to wait for my alerts to get triggered within this POI. If I do get the low time frame confirmations, we are going to swing this one back up. And this could be a potential high RR trade. Let's say we pull into this area of support, we sweep it, we break structure. Let's say we enter with a market order over here and we target this liquidity pool. We are looking at an RR of 5.5, and this is with a market entry. Let's say we enter with a limit entry, we can probably higher that RR towards 7.5. Very interesting trade. Now, we also have the short POI, and for the short POI, to explain it, I need to switch on our quarterly range, because we know that not only our mid-range and our range high and range low are important, but we know that our quarterly ranges can be extremely important as well. And currently we can see that this quarterly range has been getting respected beautifully by the Ethereum price in the past several times, right? That's a beautiful, beautiful sight. Now, we can also see that this is where we saw a local bullish sweep before the price made a massive drop off downwards. So this is exactly where the supply was coming into the market for this impulse down. Now, we have a very clean supply area. We have the quarterly range aligning with it as well. Usually I would say this is a beautiful short POI. But because of this liquidity pool over here, I'm once again not going to set limits over here. I'm patiently going to set my alerts around this POI. We also haven't made a proper inducement, because personally I wouldn't say that this is an inducement. I would like price to get a little closer and form an inducement. But let's say we do push into this POI right now and we see the low time frame confirmations once again. I will short this back down towards the range low. Let's say we maybe form an inducement. We retest the mid-range, find support and push up, and we sweep this inducement. This could be a trigger to set limits over here instead of waiting for low time frame confirmation. Okay, in that case, you can short it like this, set some limits, stop above the high, target this sell side liquidity over here. Nice RR of 4.14. Beautiful potential short trade. Understood? If you don't understand, let me know in the comments down below and I'll make sure to explain every single step to you guys. A nice confluence for the short POI as well. Is this a bearish fair value gap that we have aligning exactly beneath it? Okay, so beautiful confluences for potential short or to take massive profits of a potential long position. Both Bitcoin, both Ethereum, very, very clean charts. Now let's continue with Euro, the Pound, and also Gold, because all three of them are interesting. And personally, I'm expecting upside this week. We have to realize before we start that we have a lot of red folder news on Wednesday, Thursday, and Friday, as you can see. So one of my friends was anticipating this, and this is definitely something that I have to agree with. Usually when you see news events like this on these kind of days, Mondays and Tuesdays are usually for accumulation. Wednesdays are usually for manipulation, and Fridays and Thursdays are usually for expansion/distribution. For Euro, I'm expecting us to at least this week feel this massive imbalance on the 15-minute time frame. But personally, I'm expecting us to take out this big wick that we put in on the news event. I think it was on Friday. I'm not too sure. Why do I expect us to fill this week? Like I said, these wicks, they are a big draw on liquidity, especially if these wicks occur during a news event. That indicates that price was moving even faster, so a lot of unfilled orders are left behind. And on top of that, because of this news event and this wick and this massive move downwards afterwards, if people are looking to short the pullback, let's say they're looking to short the pullback within this M15 fair value gap, everyone is going to use the exact same high to cover their stop loss, which is above this high over here, right? Now, that's the moment where usually you can expect some kind of a short squeeze to happen. Looking at this higher time frame chart, I do believe that at some point we are going to squeeze upwards on Euro, we are going to shift structure again, form a higher low, and push higher. And I do think that this week could be the week where we are going to see a squeeze like that because of that wick that we put in, because of that news event. So personally, I'm expecting upside. Now, like I said, Mondays and Tuesdays, kind of hard to trade this week because of the red folder news, so be careful. If you do see a very clean potential setup, don't be afraid to take it. But there's a decent chance that we are just going to range on Monday and Tuesday, maybe see a dip on Wednesday to get a manipulation area over here, in which we are going to create a potential PO3, in which we are going to reclaim the range low and then expand upwards on Thursdays and Fridays, targeting this week over here on Euro. At the same time, GBP against the dollar is looking a little weaker. I think that this hour 4 fair value gap remains a nice target. Why? Because besides the fact that we have this bearish hour 4 fair value gap over here, we also have this hour 1 order block exactly aligning within that hour 4 fair value gap. And I do think that is quite a nice confluence to target for upside. Now, we can also see that GBP is already forming lower lows, while Euro is forming a higher low. This is called an SMT divergence and is a strong signal for a potential reversal. So that is definitely something to keep in mind as well. Personally, it is hard to take a trade today, but if we are going to see signs of a reversal over here on GBP with an M5 sweep and M5 structural shift, you could potentially look at longs targeting this buy side, and like I said, eventually this remains my main target for the GBP this week. Also for GBP, we might simply see some accumulation over here on Mondays and Tuesdays, and then on Wednesday we can see a potential manipulation area, reclaim and then distribute/expand upwards on Thursdays and Fridays. Now we are going to move to the most interesting chart, which is gold. Gold on Friday saw a very beautiful sweep over here of this significant low. Now we swept the low and we started expanding upwards. We can also see that gold has a confirmed shift in structure to the upside again. Why? We form a low over here, we form a lower high, followed by a fresh low over here. After forming that fresh low, we form a lower high, and this lower high brought us to a new significant low. After that significant low, we expand upwards and we have shifted structure over here because we have opened and closed multiple candles above our previous lower high, shifting structure to the upside. Now, on top of the fact that we have shifted structure, we have also displaced with a lot of momentum once again above this bearish hour 4 fair value gap. Right? It was not the bearish one actually, because this one closed in the green, but we displaced above a significant fair value gap over here. And within that fair value gap, we also have this hour 4 order block aligning around the exact same price as well. So if we're going to take our premium and discount from this swing low to this swing high, we can see that our discount is also aligning within that POI. So for gold, I would like to see a pullback into this POI, maybe with a little bit of a sweep into the discount, see signs of a reversal, and long it over here, targeting this buy side and this buy side. Eventually, we can maybe even target higher levels. Why? Because higher time frame, this could simply be a beautiful higher low on gold before we expand higher, targeting this liquidity over here. Okay, now, so for gold, I'm waiting for pullbacks in order to start building swing long positions targeting this buy side liquidity. Also for euro and also for the pound, I'm expecting upside during the week. That doesn't necessarily mean that we cannot expect downside on Mondays and Tuesdays. We have to wait for that structural shift in order to position ourselves long. If we don't get a strong structural shift, there's no reason to position ourselves long on either the euro, the pound, or the dollar, right? Always wait for the low time frame confirmation before you enter. Don't blindly set limits. The targets upwards are very clear. We are already starting to form an SMT between euro and the pound, which is beautiful to see. Patiently going to wait. Mondays and Tuesdays this week are a little bit of a low probability environment, so patiently wait for the right confirmations in order to enter. If you guys do have any questions after this quite detailed market overview on Bitcoin, Ethereum, Euro, the pound, and gold, let me know in the comments down below. This video was once again sponsored by Prime XBT. That is also the place to go in order to trade Forex and also 8 crypto future pairs. If you guys want to sign up, use my affiliate link in the description down below to support the community. If you guys have any questions after this video, please let me know in the comments down below. I hope you guys enjoyed a video like this. If you guys did, make sure to smash up the like button, and I'll see you guys on Wednesday's video. Ciao, ciao.